Good afternoon, folks, and welcome to another episode with Richie Naso. Today, we're going to talk about how to use multi-time frame analysis. Richie, how's it going?
Yeah, it's going fine. Thank you. How are you doing today?
I'm doing well. Happy to have you here. Appreciate you being flexible. There's so much to kind of talk about in this topic as well. But one thing that I'm quite curious about is back when you were on the floor trading, you didn't exactly have 6 monitors with you, right? So
Right.
what was the multi-time frame analysis for you back when you were on the floor?
Yeah, I mean, that's really interesting. It's an interesting question. That's where you learned what the time frames were without really knowing it, okay? Without really knowing it. There was no time to have monitors in front of you. There were large screens placed strategically around the trading floor, and none of which replicated a chart, okay? So what did you learn from looking at numbers? Well, I learned something I mention all the time, and people are a little skeptical about this word called rhythm, and the rhythm of the numbers. So if you focus in on a major screen that's not a chart, and I'm not suggesting people, this is 2026, so you have all this stuff at your right at your fingertips. Well, I didn't have those options at my fingertips. I had one big board that had of course, the Dow and the Nasdaq Composite, but no charts. And so you had the ES future contracts, of course, not the YM, not the NQ futures, but the ES futures.
Right.
And so again, what you learn by watching the rhythm of the numbers without the charts is the movement of the ES future contracts. The bet on hope. Bet on hope. Hope.
Yeah.
Hope is hope. Okay, you're betting on something that hasn't happened yet. You're betting there are more emotions that come into that and come with that and are associated with that. So when you're looking at the ES contract, you're looking at people betting on hope. Some are right and some are wrong, just like in anything else. But relative to the action in the marketplace, okay, while you're looking at the ES contract, it just spits out direction to you. It spits out near-term direction. And for my purposes, it's the direction that's absolutely needed to day trade this market.
Yeah. It's the direction of it right now. I would say it's always kind of like buy the dip, right? I'm looking at the SPY at the moment. It's down about 1% along with the Qs as well. Let's see, from the highs, I would say we are down approximately still within the range that we talked about. I'm sorry?
It's not 29%. Basically.
Oh,
no, I'm talking about MU I have here. Sorry. MU is such a huge factor going forward. So
I was going to say that I don't know what right. I need to have what you're having there, but we'll talk about MU here in a second, because yes, that has been a stock that reported very well. But let's talk about the market here for a second. Down about 2.5% from the highs. You have all these other stocks that are leading the way. People are talking about rotations out of the chips, out of the memory stocks, and all that other good stuff as well. Before we dive into continuous conversations about the multi-time frame analysis, what do you make of the market as a whole at the moment?
Yeah, I mean, I think I laid out in the blog or the market letter that I wrote on Saturday, and near term there is some volatility happening. There is no question about it. The semiconductor SMH ETF is making lower highs and lower lows, and it's very volatile, and it's the most followed, and in my opinion, the biggest factor in the overall market is the SMH ETF. So that's not a good thing. The advanced decline line has been more positive because they've been buying Dow stocks and selling technology, but that's beginning to turn. I didn't check it today, I've been out, but the advanced decline line, I am sure they look like they've spent enough money in propping up the Dow stocks and the more conservative stocks, and it looks like they moving to the sidelines here today. That's what I see. And that's really, really dangerous. 55% I have just a couple of bullet points here for you. 55% of all tech stocks are below the 50-day moving average. Okay. And that's significant.
Yeah.
Go ahead. Please.
No, go ahead. I was going to prompt you.
One of the reasons here, you got Michael Burry calling for an AI bubble very near term. And, people listen to him and he makes people nervous. But, I mean, he does what he does. What stocks does he cite? AMAT, Tesla, Caterpillar. Oh, the darling of all, farmers and construction. MU, NVIDIA, the SOX index. These are all areas that he's targeting as a bubble area. And this MU, we speak about it intermittently for weeks now, maybe longer than that, off and on. It always comes up. And what do I say? I say it's the craziest stock. I've seen it bury people on and over again over the years, no matter what the circumstances are behind. That's a good point here. At a stock like MU, and we speak about this again, the fact that it's a crazy stock. And I've seen it bury the smartest of people that I know on Wall Street. I've seen it bury these people. And it's doing the same thing now. But the point I want to make is this. No matter what the atmosphere is, no matter what it is, the personality of the stock holds true. Just like in your field, or one of your fields, is sports. And if you look at past statistics of what the Cleveland Browns do when they play the Baltimore Ravens in Baltimore for 20 years, you're going to see the same dynamics take place just about. Now, there's a different coach, a different owner, a different players, but it holds up. When I say this stock, what I say about this stock, it just holds up. It doesn't matter what the atmosphere is, which is a good point to keep in all your minds.
Yeah. We often talk about the personalities of stocks, like you mentioned. We also, on the sports world, talk about the tendencies. What does a player X do, like you mentioned, in certain situations? Whether, if a team is down 2, what type of play do they go with? If they're down 3, different situations, different aspects of things, especially in the World Cup, you'll see that as well. Which, by the way, what a madness of a World Cup it has been. I don't know if you've been following it, but it's been nothing but chaos. Okay.
Well, they did with the U.S. That was really, they should have left that completely alone. They had no shot before, but after they did that and brought them back in, forget it.
Yeah. I think I saw a meme where someone said United States soccer fandom, June 2026, July 2026. So kind of a bit of a short-lived there. Getting back to the multi-frame analysis as well, what's the biggest mistake you kind of see traders make when they're looking at, say, these different time frames themselves?
Well, if you don't identify just what type of trader you are, that's the deal. I mean, if you understand that in higher time frames, the funds and the institutions control the higher time frames in general. Okay, so they control the breakdowns and breakouts. That's the higher time frame. The longer time frame, the mid time frame is where really the positions are set up. Mid time frames, all right, 2 hours, 1 hour, 30 minutes. That's where positions are set up. And then you get, of course, I'm going by the book here because I am nothing about going by the book. Okay, you all know that. And certainly you know that, Janine.
I do.
The lower time frames are about entry and execution.
Okay.
I mean, simply put, entry and execution. Yeah. So, why do I have 1 minute and 3 minute time frames here? There's the answer. Entry, it's about entry and execution. Execution saves you money. The tighter time frames are conducive to helping you save money if your entries are good.
Yeah. So basically, what I'm hearing from you is that the higher time frames, whether that's your 4 hour, your daily, your weekly, your monthly, those are there to kind of help you chart And then the lower time frames, whether that be the 1, the 3, or the 5, is to kind of go ahead and get into the stocks themselves and in terms of executions as well. You know, is it safe to say that if you see a pattern, if you see a trend line, if you see some type of action that can be taken on a stock, the higher time frame is a bit more reliable than, say, the lower time frame?
Yeah, I mean, it's a trend. The higher time frames, you will see a clearer trend. You will see key support areas and resistance areas over the time frame. Moving averages are going to show up more prominently in higher time frames. So these things are all, yes. The answer to your question is yes.
Yeah. That's something that I've kind of often found as well. Now, when you go through the different time frames, does the analysis change based on what you're trading, whether that's the ES, whether that be, stocks, whether that be anything else in, crypto or whatever the case is? Like, does the fundamentals of charting on a multi-time frame analysis stay the same throughout all of those different securities?
Absolutely. Yes. Absolutely. A resounding yes to that. No matter what you're trading, if you have your patterns and if you have your trading personality that has taken over, yes, the answer is yes. It doesn't really matter what you put up there. The patterns are going to show up in whatever chart patterns are conducive to you making money. It's going to say the same.
Sorry, you lagged there for a minute for me. What do you say to individuals who, I know sometimes I deal with this, right? Where the 15-minute may be telling me that the stock might be going a bit bearish for the next, couple of hours, where another time frame may be telling me, oh, no, it's actually a bit bullish because you've got support here, right? What do you end up doing in that situation where different time frames are giving you different information?
Quite frankly, I've eliminated that because I'm a day trader, near-term scalp trader. And when, people take the word scalp as being some kind of wrong word, bad word, it's not. You can make 20, 30, 40 handles, points with a scalp. Scalp is just not a bad word. So I try to keep things condensed. I don't want to be wide in scope relative to how many time frames I'm looking at. Am I aware of those time frames? Yes. Is it part of my decision-making process trading on a near-term basis? No, absolutely not. Yeah. I keep things simple, and that's part and parcel has to do with what's comfortable, what you're comfortable with, what you've developed. That's the most important thing. Everybody has a different comfort zone of what they develop, what they follow, and how they make money as a result of it.
Yeah, there's definitely a lot to kind of figure out with different aspects of the trading world, different time frames. They tell you different things. I know you're kind of reading, whether that be the DOM, whether that be the level 2, whether that be the kind of the Kettler channels as well. Something that I've found for folks that might still want to end up using charts to trade is that if it's like the 10-minute or the 15-minute, and if you're getting mixed signals, might be best to kind of let it go. If it's kind of like the 4-hour versus a 5-minute, then it's all about, well, are you planning on swinging this for a couple of days or a week? Or are you looking to scalp it, like you said? Then maybe the 5-minute is just a quick little get in and out type situation.
Yeah, well, in the upper ballroom up there, those 3 charts are 5-minute charts. So relative to what you just said, those are constantly running for me, the 5-minute charts. And I do look at them. And again, so 5 minutes, 3 minutes, 1 minute, condensed, you see. Yeah. So once you go 15 minute, 30 minute, 2 hour, 4 hour, you're spreading out, you're clogging up your brain. Now, listen, this may be good for people in their style of trading. It may be. But for me, and trading on a near-term basis, it's not good for me. I don't want to look at I don't want to be influenced by that longer range type of action.
Yeah. Is there let's kind of take a quick step back here. I know you're a fan of a couple of the moving averages or Kettler channels. So what are like your favorites, if you have any additional ones, indicators, so to speak, that you like to use when you are scalping?
Oh man, the 9 EMA overlap by the volume weighted average. I mean, it's that simple. Those two, when they cross on a pattern, you will see a scalp trade that is developed in a very high percentage of cases. So the 9 EMA and the volume weighted average, when they cross over, and it's a crazy thing, but it's just very simple. Like again, simplicity is good. So when you see
frame,
I'm sorry.
On what time frame for the 9 and the VWAP?
1 minute.
1 minute.
One minute, because that will show you how quickly this scalp trade will develop. So once the 9 EMA crosses over, remember we spoke about the volume weighted average a lot of different times. When the volume weighted average, I'll go through the scenario very quickly for people who haven't listened to this. But the 9 EMA, when it crosses over the volume weighted average, the VWAP, a portfolio manager decides to peel off 10%, 2%, 5% of their XYZ position, which of course we all know their position that they have so much money under management that their positions are no longer 10,000, 20,000, 50. They're 10, 20, 30, 40, 50 million shares. So if a portfolio manager wants to peel off 2 million shares, he gives it to the trader on the desk, and the trader on the desk gives it to a sell-side broker, and they say, here, just beat the volume weighted average or just keep me close. Why? He doesn't want the trader to gamble, and be way off the volume weighted average, because that's how he's going to be judged. So when that volume weighted average, when the VWAP, when the 9 EMA is above the volume weighted average, the tendency for those orders, and there are hundreds of thousands of them that are riding on, it's the preferred way for a deep-pocketed fund to buy and sell, okay? Just stick to the volume weighted average, do your best. And they put it on an algorithm, and that's the end of the story. But when they're above the volume weighted average, they have to buy, all right? They buy. I'm not saying they close their eyes and buy every offer they see. No, but they have to keep a steady presence, if you will, above the volume weighted average. Conversely speaking, below the volume weighted average, they have to balance this out. We know the market goes up or down. So conversely speaking, when it's under, they're selling. And that's the way this works. So the volume weighted average is extremely, extremely important. And on a near-term basis, where the 9 EMA crosses over that volume weighted average, or below it, there's where the momentum is. Quote, that's where the momentum is for near-term day traders.
Got it. Well, I appreciate the insights on that. I know you had a couple of stocks. You talked about MU, how that's dropped a good amount there. Are there any other stocks that you wanted to kind of quickly gloss over for us?
Well, you got Taiwan, all right, MU, MU is going to be affected. All these tech names are going to be affected next week by Taiwan Semiconductor, the largest producer of chips. And they come out, their earnings on the 16th. You should all mark it down, pay close attention to this. And I will say that, these earnings have been sold, every one of them, no matter how good they are. They've been selling them, like Samsung. Big action in the stock, and it, big volatility in the name. They relatively come out with relatively good earnings, but it didn't matter, and it really doesn't matter. So next week, Taiwan Semiconductor on the 16th, their earnings are going to affect NVIDIA, ADM, Qualcomm, Apple, MU, Marvell, and ARM. These are some of the names that are going to be affected by Taiwan Semiconductor. This could turn the market and hurt the market, or this could prop the market up, and this could, we could roll into a bottom in the tech names by next week. You don't know.
Yeah, you had Marvell that just went ahead and closed the gap here, closed it yesterday, and it bounced up a bit, still holding on to that level. ARM is an interesting one. I think we talked about this one with Felix last week, where this level, matter of fact, might have been you. I'm not quite sure, but it was this $300 level that was holding on once, twice, three, four, five, but finally went ahead and cracked today. So we'll see how it ends up closing itself. And like you said, you've got the earnings coming up on the 16th. For a different stock, and then you got this one that reports at the end of the month, possibly on the 29th as well. So a lot of earnings season with these high flyer hyperscaler names in the memory field, in the data field, in the AI chips, and all that other good stuff. Who knows, right? Michael Burry, yes, he had the big short. Yes, he called that one really well. But since then, he's also called a few things that just have not worked out, which is the life of a trader. Nobody hits at 100% batting average. So
correct. That's right.
Well, we'll see how kind of this one plays out. Because, I think he was also short at one point Palantir, which is off the highs, but it's bounced back. So I don't exactly know where he went short.
Exactly. Yeah, exactly. I mean, nobody is, these people, when they become a household name, they have to say something or they don't keep their brand up. And I'm not saying he's right or wrong or indifferent. I'm just, it's a factor. You have to know. You have to know when people say things, or when people that have a following say things. You have to know whether they're right or wrong. It's really secondary. But the fact that there are a lot of people follow them, you have to know.
Yeah, absolutely. Well, Richie, any other final thoughts from you in terms of whatever the sectors may be doing, or any other notes that you have here for us today?
Yeah, I mean, it's a scary time right now, okay? And as I wrote on the weekend, and my conclusion was that it appears that the near-term volatility is upon us. But I do believe that this could be a buy and hold type situation. It's relative to the amount of the size of your bank, I should say. And everybody gets nervous near the bottom. And, everybody thinks that it's all that it is the bottom, and it's not. And it is, or is the top, and it's not. That's what makes the world go around. Important thing to remember is that, to me, is the cash, the lowest. I got stars all over this one. The lowest level from fund managers in a number of years. I don't want to say how many years, okay, but the cash in the account of fund managers are at a lowest level that it's been in a long, long time. So that means they've placed their bets in all these stops along the way, on the way down. And that it's just a factor to keep in mind.
We'll end up seeing how things end up in terms of the rotations, in terms of all the different things. Again, stock market, the S&P 500 is only about 1.5% away from the highs. We'll see how it does when it wants to go ahead and climb back. Richie, always a pleasure. Thank you so much for your time. Or did you have something else? Yeah, go ahead.
Yeah, maybe. Let me take a quick look here. I was looking at something. Of course, oil is the craziest, wackiest thing ever. You could have predicted this easily, to me. I don't trade oil, but it looked very predictable. The Qs, okay, you're at 706.93 in the Qs. 695 to 700 are huge put walls regarding option put walls. Okay, that's a huge support area for the Qs. Okay, this could culminate next week with TSMC, and that could be a failed breakdown trade that you should be buying. If the market meanders around and it's level to level until next week, which somehow, some way, it winds up doing. It's not an accident either. It just winds up doing it. So I would keep a close eye on the Q 695 to 700, major support. And relative to options, you can clarify this with Felix, because he'll know what I'm talking about. What else I have for you? I mean, they're still buying defensive names, utilities and healthcare. All right. I don't even want to look at UNH at 187, where I didn't have enough capital to really do what I wanted to do. So every time I look at it, I get angry.
UNH, yeah, that's been quite of a big bounce, especially with all, of course you had the unfortunate passing of the CEO, regardless of what you think. And then you had all these other investigations and everything else. Looks like it hit a low of about 230s, and now it's bounced back to about 427s or so.
Unbelievable. Put up a UNH chart.
Let me go ahead and show UNH on the daily. Matter of fact, let's go weekly because it's been a minute since this has been story. But here's kind of what I'm referring to, right? You had all the investigations and everything that they were dealing with, and then it's just
look at that bottom. What is that bottom there? What?
It is approximately 246.82. Call it 247.
Yep. And then it didn't make that lower low when it came back down, and that was the area that and that's a great example of letting the market show you. It's just a great example of that, where it didn't set the lower lows. If you gave it enough time and you didn't buy the low, I don't know who always buys the lows or the low, but you see after it popped its head up that's it, all over.
Yeah.
Great trade. Sorry I missed it.
Well, we missed quite a few of them, but another one that is kind of interestingly finding the testing support, I guess is the best way to say it, is SpaceX, where this level of 147.21, even today, it went ahead and tested it, and it's bounced at the moment by a couple of points, still a long way to go. But the next resistance level that I have is about 155.87, call it 156 or so. We'll see if it can get above that. But Richie, always a pleasure. Thank you so much for your time.
Thank you, Zaneed. Thank you, folks. Have a great one. I'll talk to you soon. Thank you.
Of course. Hope you recover well. Talk soon. Bye-bye.
Thank you. Bye-bye, Zaneed.